Hey. Happy Tuesday and welcome to Traders Talk. Hi, this is Bing Hon and I'm your host for today's Traders Talk. So great, or not so great. Let me just check. All right, great. So today is Tuesday and yesterday we had a very exciting trading day and it is all very bloody. All very bloody. And why do I say bloody? Well, the S&P and basically all the markets have actually dropped like flies. Okay, dropping like flies. This is what we're going to talk about in the market talk. And basically, all the markets have actually dropped like flies. And we are not only talking about the U.S. Market in particular, and basically all the major markets have been dropping. And yesterday S&P has actually dropped by about 2%. Let me just check. Yesterday S&P has actually dropped down by let's see. Suddenly it is actually gone. I have actually put it on the show information, and let me just check it. S&P has dropped about 2% and then what else has actually dropped? The Nasdaq has also dropped down. Nasdaq has also dropped down. Yep, here is it. Nasdaq has also dropped down by 3.75%. Nasdaq 3.75%. The Russell has dropped by about 2.37%, or about close to 800 points. Even the on the Asian side, the Hang Seng Index has also dropped about 3.8%, 800 over 3.8%. And then the China index has also dropped about 3.19%. So all the markets has actually dropped yesterday, and of course the thing which basically happened over the past week was actually the war, right? The invasion into Ukraine. And not only that, I mean, it has actually been causing a lot of other things. And last weekend, which is on Sunday itself, we also saw that suddenly oil has actually spiked up to about $130 before it actually came down back to $120. Yeah, and you can actually see all the markets are dropping like flies. Okay, so again, the oil price has rise because of Ukraine tension. It's spiked up to now trading at about 120, and of course has actually caused the market to actually go into the bear territory. Okay, so what is the bear territory? Of course, the general indication is that from the high, if it actually drops down by more than 20%, it is actually going into bear territory. And of course, the the current retracement, Nasdaq has actually slightly went above 20% decline. Yeah, Nasdaq, and of course, S&P itself, we have actually not seen it go to that low yet. Yeah, so S&P has actually just dropped down by 13%. And then but it actually hit the one of the levels which we mentioned last week, the 4,200 levels. It actually hit that level, and it actually breached down, but not to the earlier lows. Earlier lows was close to 4,100. Yeah, close to 4,100. Let's just put this down. Okay. Okay, let's put this bigger. Okay, so earlier it actually dropped down to about 4,100. Currently, it is actually sitting at about 4,200 level. Yeah, so this is actually the level which we actually indicated, 4222. Yeah, it has actually breached that. Okay, and where are we going on from here? Whether it will continue to go down or whether it will bounce back up. Of course, nobody knows. I don't know. Nobody knows. It is always a guess, and of course, we would not know if things can escalate worse, and it can actually drop way down to even the 4,000, close to 4,000 level. Yeah, but of course, like we said, whether you are an investor or whether you are a trader, basically you trade or you invest according to what the market price action is. Yeah, of course, when the market is actually coming down, right? When the market is actually coming down, then of course don't push your way to trade against the market. Against the market, that means basically you try to actually long a position, unless of course you have a safety margin. Uh, if you are trying to actually long the market. And of course, if you are directly trading shares, you would not have such kind of safety margin. You will not be able, you either buy at the current price or you sell at the current price. Yeah, you can't actually say that you actually want to buy at a lower price. Yeah, but of course, with options you can always do that. That means basically if the market is actually trading at this level, and if you actually want to actually have a safety margin, you actually want to have a safety margin, then you can always buy at a lower price with options. And of course, we can actually structure various option strategies like selling a put. Yeah, selling a put, where you can actually do at 10% below the current price, if that is fine for you, or if you can even do it at even lower price. But of course, the further away from the current price, the less premiums you will receive. And of course, there are risks in trading options. If you do not know what is options, please don't go into options until you actually learn what is how to actually trade options and what is actually options. Yeah, and this is actually the S&P here. Yeah, and of course, today, just before the show started, I just saw the ES mini futures is actually slightly green. Yeah, slightly green. But of course, when the market opens, we do not know where the market will actually go. And of course, it can bounce up. It can actually bounce up, like what happened in the last big dip here. Immediately on the same day, on the same minute, it fell about 3%. It actually bounced up immediately. Whereas this time round, we did not actually see that happening. Yeah, this time round, it here. Yeah, yesterday the market was actually coming. It actually opened lower. It actually came down. Yeah, and then after a while, it actually went slightly up. And before the end of the day, it actually traded actually traded lower. Yeah, closing about 130 points down. Yeah. So when I knocked off yesterday, I think it was actually down about 60 points. Yeah, 60 points. And during my sleep, it continued to actually drop. But it continued to actually drop over another 60 points. Yeah. So you can't, of course, unless you don't sleep, right? Unless you don't sleep, I mean, depending on which time zone you are. If you are in Asia, then of course you need to sleep, right? And if you are not in Asia, if you are in the US, you can actually trade within the same time zone. Otherwise, you would probably be able to actually look at the market for three to maximum about 3 hours, 10, 11, 12, 1. Yeah, probably you knock off at about 12 to 1. Yeah. So this is the S&P. And of course, if you move on to the Nasdaq, right? The Nasdaq, this is actually Nasdaq. As I said earlier, Nasdaq has actually went into bear territory. You can actually see the short term, moving averages, the 50 moving average, and also the 20 and 50 is already is actually sloping down. Yeah, and we are right here at about close to 20.5% down from the high of the market achieved somewhere in November. Yeah. So again, it may drop further to about 12,000, 13,000. Yeah, 13,000 level here, 13,000 level here, or it may bounce up further. Yeah, but of course, even if it actually bounce up further, I would probably think that it won't be back on a straight line up. It will have a lot of resistance to actually go through. And of course, if you look at the previous retracement, right, the previous retracement, it hits the 20 moving average, and then basically it bounced back down. Yep. So again, if you are investing, yeah, of course there are a lot of opportunities for you to actually go into the stocks which you love, right? The stocks which you love, and of course, if you are trading, the volatility will give you many more opportunities, whether you are actually trading the market up or whether you are actually trading the market down. But of course, the higher probability right now is to, of course, trade the market down. Yeah, trade the market down. Yeah, and of course, if you are trading the market up, yeah, then you have to actually get the margin of safety, and only trade up during support levels. Yeah, at support levels, when you actually see support levels, then you can actually trade it up by having option structures which actually give you margin of safety. For example, bull put spreads, or naked puts. But of course, right now in the current environment, right, I would not advise you to actually go into naked puts unless you are really you are really confident that the market won't go down further, or the price which you actually sell the put is the price which you are willing to buy and hold the shares. Yeah, regardless if it actually come down further, you are fine with it. You can continue to dollar cost it down. Yeah, by selling more puts. Yeah, if that is your view on that stock, then of course you can actually do it. But of course, if that is not your view, then of course it is actually very risky to actually sell puts during this environment. Yeah. Okay, so bear territory. Bear territory. Let me just put it here. Oops, wait a minute. Okay, Nasdaq bear territory. Yep. So again, the futures, I think it is actually slightly up, if not mistaken. Yeah, up by 16 points. Nasdaq futures. S&P futures is also up by 16, and then Dow futures is also up by 100 points. Yeah, yesterday Dow went down close to 700 or 800 points. Yeah. Okay, so of course, when the market open later on, right, one of the things which of course you can actually use to see the whether the market is going to be slightly bullish or bearish. You can actually also look at the VIX. You can actually look at the VIX. Yeah, we have covered VIX a lot. This is actually the volatility index for the S&P 500, right? And yesterday itself, VIX has actually spiked up to close to yesterday it is actually about 34 36 36 36. Was it that high? No, I think it is actually about 35. I think this is not, this is the candle 7 March. Yeah, so it actually spiked up to about 36 36. And of course, if you look now, seems like the VIX is actually going to come down. Yeah, come down. Yeah. And if you look here, this is actually the daily candle, right? You can actually go down to the 3 minute 3 minute VIX, right? 3 minute VIX, 3 minute VIX. Yeah, 3 minute VIX, to actually see uh where it is at the moment. I think this is, it should be here yesterday, 8 March 16 555, 8 March. Yeah, here. Yeah. So VIX actually is here. Yeah, VIX was actually closed at about 35 here. Okay, so when you actually look at VIX, right? Okay, I when I actually trade, right? When I actually trade, I always put this VIX into one of the screens alongside my charts, alongside my my other charts for the stocks which I actually want to trade. Okay, and basically how I actually use this indicator is actually I see whether VIX is actually trending up or whether VIX is actually trending down. But only during times like this, only during more volatile times like this, this actually becomes more important. During normal times, right, VIX actually does not move much. But during volatile times, right, you can actually see VIX actually moves quite a lot, quite a lot. Like for example, if you look at yesterday, right? This was actually yesterday's VIX, 8 March, 8 March, 8 March. Let's see VIX. What actually happened? Okay, VIX actually opened here yesterday, right? Okay, so when the market actually opened, right, VIX was at the 30 35 35. Yeah, 35. Then if you look at here, the VIX has actually came down before it actually uh, went up, right? Went up. Yeah, came down, went up, and then went up. So this was actually the closing. Came down and went up. So if you actually look at the S&P, let's look at S&P, right? SPX. Okay. So if you look at the SPX, right? SPX was actually here for March. For March. No, this is 3 minute. 3 minute. Here, here. Yeah. So if you look at yesterday, SPX was actually all the way down, right? All the way down. All the way down. Yeah. But in between, it went down, went up, and then it came down. So it would more or less trade together alongside the VIX. When VIX goes up, the S&P would tend to actually go down. When VIX goes down, the S&P will actually tend to go up. Yeah. Especially if you are trading shorter time frame, right? Shorter time frame, that means you are doing intraday trading, right? This actually becomes more useful. Of course, if you are just doing uh, buying investments and all, then of course this indicator would how to say, you would just need to know the overall VIX, whether it's above 30, above 30. I mean when VIX is actually above 30, right? Then basically it would mean that generally the stocks in the market will be cheap. Yeah, VIX above 30, the stocks in the market will be cheap. But VIX has recently been above 30 for quite some time, and most of the time it does not sit there for long. It does not sit there for long. But over these few weeks, right, VIX has actually stayed on above 30 for quite some time. If you look here, right, the 30, right? So 30 is here, right? If you look here for the past 2 weeks, VIX has actually been trading all the while above 30. Under normal time, it will tend to actually trade below 30. Yeah, but because tensions are still high, right? In Ukraine, right? Uncertainty is still there. Then of course, VIX continue to be high. Okay. Okay, what else I wanted to cover today? Okay, so you have actually mentioned this this S&P we saw. Okay, so this is actually the sector. Yeah, I wanted to cover the sector. Okay, sector here, and the sector is here. Okay, so this is actually the sector for under Finviz, right? If you want to see the heat map, right? Basically, all the companies in the S&P 500. This is actually a site, finviz.com. Finviz.com. You can actually go there and look at this site to actually give you a gauge, right, within the market, what is actually bullish, what is actually bearish, and you can also look at the short-term daily performance. That means this is what is happening during the day. This is actually the day. This was actually yesterday's one. As I said, very blurry, very blurry. So all the sector stocks, right, is in the red. In the red. Of course, the only performing sector for the past months is actually the energy sector. Energy sector. Oil price shoot up to 120. Then of course, all these ExxonMobil, this is Chevron, and all these other Schlumberger and all these other companies is actually going to make a lot more money. And of course, the other one is utilities. Utilities is actually also the strong sector. Yeah. And of course, the other sectors, technology sell down yesterday. Microsoft went down by 3.8%. Google went down by 4%. Apple Apple went down by how many percent? 2.37%. Visa, that means all the payment companies, Visa, Mastercard, American Express, PayPal, also went down yesterday. Yeah. And what else? JP Morgan, the banks also had a sell off. Of course, the banks sell off actually start besides this turmoil, right? The bank sell off also started after J Powell more or less indicated the rate hike would be only 0.25 instead of 0.5%. Yeah, in this next week, I think it's next week. Yeah. Okay, so what other sectors? Okay, cyclical. Amazon is also down. Amazon is also down. Tesla is down. Everything is down. Yeah. So this was actually yesterday. So yesterday everything is down, and except the energy sector. Okay, J&J was the only one which was positive yesterday, and of course that was the day performance. Then of course you move high up to a higher time frame, right, to actually see what has actually performed for the past month. You can actually look at the weekly performance or the monthly performance. Okay, so on the weekly performance, right, you can actually see that the healthcare and the consumer defensive, besides the energy and utility, was the area where last week continued to be strong despite Thursday and Friday, right? The market actually had a sell down. Yeah, uh, no, it was actually Thursday, Friday, the market actually came down, right? Yeah, earlier of the week it was actually up. Okay, so currently healthcare sold down, everything sold down except the utilities and energy remains strong. Yeah. Then of course, if you look at the monthly again, this is more or less the same as the weekly, where tech, communication, financials was actually down. Healthcare, consumer defensive was actually up. Yeah, was actually up. Then of course with this indicator, right, with this indicator where you actually look at the different different time frame, right? Different time frame and the different sector, right? Okay, this can actually give you a gauge. This can actually give you a gauge if you are trading the markets, right? Which are the potential companies that you may want to actually go and look at it to see whether you actually have a trade setup. Yeah, trade setup based on also this as a broad view, and then from there you can actually focus to look at the trade setups on the charts. Okay. Okay, so this was the indexes. Yeah. Okay, so basically, what can we what are we looking right now? Of course, as I said, on trading side, it is actually more on the still on the uh, bearish what is that bearish uh, bearish trades, and on the investment side, okay, investment side is actually coming to a lot more interesting opportunities on the investing side. Okay, why I actually say so, right? Why I actually say so is of course because when market is actually down, right? When market is actually down, that is the time where you can actually see what is that where you can actually find good bargains. When market is down, you can actually find good bargains. Okay, you see my chart here? Let me see. Okay, so one of the things, of course, I am actually interested here is some of the stocks here. Let me see. Am I showing now here? Okay, so one of the things is the stocks which I'm actually looking at is this stock here, Visa. Okay, it is actually like, okay, so Visa is actually one stock which has actually came down by quite a lot during the current retracement. Okay, if you look at the chart here, right? Okay, I think the chart is not refreshing. Let me just check what's happening. Add to stream. Okay, I chose the wrong one. Okay. Okay, so if you can you see this? Okay, good. So one of the stocks which I'm actually looking at right now is Visa, and earlier, of course, I think during the earlier retracement here, I have already added some positions here. But of course, the market has actually went up, but unfortunately, it hit uh, uh, more or less a double top here before it actually retrace back here. Okay, so right now it is actually at this level. Okay, at this level, and of course it looks like uh, a good support level, and there is possibility that, of course, if the market rebounces, highly likely Visa would actually go back higher. But of course, if the market continue to go down, there's also possibility that it will go down to the next level of about 180. So, like I said, there is never a time where we can actually catch the bottom. We can never catch the bottom. But one thing, of course, if you are investing, you can dollar cost average your entry points. Entry points. So of course, like I said earlier, I've actually added some at this level, and of course now it comes down another $10. Potentially, I can put in another tranche at this level. But of course, if it continue to actually go down to 180, then there's also a possibility that I can add in a third tranche here. Yeah, third tranche here, because the last time it went down to this level was in October. It was in October. I think during that time was again all the talks about the rate hikes. Was it the rate hikes? There was some news that it's either generally on the market on the rate hikes the market has actually dropped, or there was actually also some news back then about what? About Amazon cutting off Visa from its payment system. I think, was it Visa or Master? I think well, it was Visa, if not mistaken. Yeah, yeah. So opportunities will come. Then of course now it's actually coming back. If you have not added here, then of course there is another chance right now to actually add. Yeah, because after here you can see that all things goes back to normal, right? All things goes back to normal. The potential upside is going to be about $70 back to its high. $70 back to its high. Yeah, and of course, what is the downside? You can actually see that the downside coming back to COVID lows is going to be about $40. Yeah, so $40 for potential of $70. Then of course we can actually gauge where the risks are and where the opportunities are. Yeah, so this is actually one very simple way for me to actually see whether it's actually a good buy-in price. Yeah. Okay, so that is actually Visa. Of course, the other payment platforms is actually on Mastercard, right? Mastercard. Yeah. So Mastercard again, similar patterns, right? Similar patterns like Visa, where it actually also bottomed down to the previous lows of 312, and of course going down back to the this is October low, right? COVID low is about 200, right? So almost about another 90 here, 90 down to COVID low, but I don't think it will actually go back to COVID lows, like, yeah. But of course, let's put in a scenario, assuming we are actually wanting to invest in Visa and Master, right? Visa and Master, we are actually choosing one. Then basically, one very simple way is to also see what is the downside and what is the upside, and for it to actually go back up to 400, so it's actually about also 90. Yeah, so 90. So 1990 here, yeah, all the way down here, all the way up here, as compared to earlier just now was actually 40, 70. Yeah, so given a choice, I would pick the cheaper one on the basis of less downside risk. Yeah, less downside risk. Yeah. So that is just my simple way to actually look at things. Of course, you can always also look at the numbers and all this and crunch and spend time. Yeah, but basically, when I look to trade, I also look at just the because the trends for both the companies at I mean, I have not invested in this company. I've not invested in this company actually. Okay. Okay, this is actually Tesla. Okay, this is actually Tesla. I mean, of course, a lot of people actually get into Tesla, right? But I am starting to actually see, because when I look at the so-called volatility of Tesla, right? Volatility of Tesla is actually quite big also, quite big also. And of course, when there is actually big volatility, right, there is also potential to actually profit from such kind of volatility. Yeah, because if you look at yesterday itself, right, it went down by $33. It went down by $33, but it went down by $33. Was it here? It went down. Okay, we went down by $33, but if you look at the so-called highest to the lowest point, right? Highest to lowest point is actually $60. That means 7% movement from the highs and the low. 7% movement in a single day, and of course, this actually happens during times when the market actually moves also about more than 2%. And if you look at the other round, right, and on 24th when the invasion started, right, it actually moved about 100 points, 12%. And if you look at other days, the daily intraday movement is also quite high, 7%. And here it is actually about 5%. Yeah. So let me study more. On Tesla. Basically, to look at what kind of place which we can have. I mean, in the past, I used to actually just trade credit spreads on Tesla, uh, and of course because the volatility of the IV of the stock became was high back then. I think back then the volatility, the IV for Tesla was about 100. Yeah, I'm serious. It was about 100. And it was quite high. And of course, when it is actually quite high, right, you get to actually trade very far out of money, out of money trades in Tesla. But of course, I stopped trading when Tesla IV actually came back very low to about 20 over. And then now, since I've not traded this stock for a while, and it's time for me to actually relook back to see whether there is actually the high volatility continues, and to actually see whether we can actually do any option setups on Tesla. Yeah. Okay, so this is one thing which new one which I will look at. Of course, other stocks. Apple is also coming down to about 160 right now, and of course, I mean potentially, of course, this I mean, if it comes down back to this 200 moving average, right? Yeah, that is actually also how to say, potential for doing some what is that, bull put spreads. Yeah, bull put spreads, or even naked puts is also possible. Yeah, if you want to buy Apple at a cheaper cost base, and not, that means you have still want to have Apple at probably about 140 something. Yeah, if it drops further, yeah, you want to buy it cheaper, then of course you can actually do naked puts. If it falls down, you take the stock. If it don't fall down, you take the premium. Yeah, but make sure you have sufficient cash to actually buy Apple. Yeah, if it at 16,000. Yeah, here now is about $16,000 for 100 shares. Yeah. Visa, Mastercard, the China stocks are still quite bad. I mean, Baba is more or less at about $100. But of course, if you look at the movement for Baba right now, even on a day when S&P actually went down by 300%, 300%, two over percent, right? 2%. Baba went down by only $2. Yeah, Baba went down by only $2. Yeah, as compared to other stocks like Baidu. Yeah, Baidu, the drop is actually much more. Baidu actually dropped by about 6% yesterday. 6% yesterday, and Baba actually dropped by only 2%. Yeah, 2%. So of course, I mean. Some of the views in the market is, of course, that these stocks may have dropped to is this low. Yeah, but of course we will not know anything. I mean, anything can actually happen in China, yeah. And of course, with the government right now still trying to actually take all these big tech companies to actually trying to convert part, not to convert, I mean trying to actually put back the benefit to the citizens, right? To the citizens or to the workers, right? To the workers, yeah, by cutting fees, and all these kind of things, right? Or forcing, not to say force them, um, 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 make them contribute back, lah, yeah, by giving, doing charity, doing some kind of corporate social things, donation, and all these kind of things. Yeah. So of course, this can only happen in China, lah, yeah, where you need to actually appease the authorities, or or continue to go down the drain. Yeah. So Baidu JD, okay, JD, again, like I said earlier, right? Like I said earlier, would be one of the so-called cheaper entries on the China side. And again, the price which I earlier mentioned was actually at about $60, right? And now it is actually coming back to 60, 60 50 again, yeah, 60 50 again. Yeah, so this is again one potential which I might look at to see if you can actually structure something below, yeah, something below, yeah, above put spread or something. But again, please bear in mind the China side is also facing a market down, right? On the China side, market down. Yeah. So of course, if you do any trades, please make sure you have sufficient margin of safety, and also duration can actually take on, assuming the prices continue to actually drop down. Yeah. But of course, if your size is small, then it would not hurt your portfolio much. Yeah, if these trades goes lower, or if you need more time to actually get the trade up. Yeah. Yeah. What else? Okay, I said bank stocks are annihilated, right? Bank stocks are annihilated. JP, this is Goldman Sachs, right? Goldman Sachs has actually came down all the way from 420 to 320. Yeah, about 25%, 25% down. Same as JP Morgan. JP Morgan has also came down from 170 to 30 right now. Yeah. So again, keep a watch on the banking stocks. Of course, once this volatility goes away, then this is again one of the sectors which will rebounds quite fast. Yeah, mainly because the implementation of the rate hikes going forward. Unless of course US goes into a recession, because oil price continue to be at its high of 120. Yeah, because again, market in historically, when oil price is at historical highs, then of course the recession tends to actually come after that. But I don't think this what is that this oil price, high oil price is actually going to be extended if the tensions starts to go away. I mean, the war and all starts to actually go away, and the oil price should actually subdue back to the earlier prices of about 80 $90. If you do not want to have a single exposure to bank stocks, XLF is again the banking ETF, right? The financial ETF. You can actually also look at the XLF, which is also one proxy to actually go into the banking sector. And again, the prices of XLF has also came down from its about 14% from the high. Yeah. So if you look just now, Goldman Sachs, JP Morgan went down by about 25%, right? The individual stocks. But XLF as an ETF, the reduction is slightly lower at about 14%. The other one is of course BAC, right? Bank of America, Bank of America. And Bank of America has also gone down by, I think here, yeah, about 23%, 24%, 23 to 24% from high of 50. So now it's actually trading at 38, 38, 34. Yeah, 38, 34. Pre-market up by 60 cents. Yeah, pre-market up by 60 cents. Looks like the market is rebounding, but of course, if it actually continues to rebound up again, continues to rebound up, look at VIX. VIX should actually come down. Yeah, but of course, if you actually see VIX turning around, VIX actually turning around, increasing back the short term VIX, that means the 3 minute chart which I show you. If you see that VIX starts to actually do a U-turn, then that's the possibility that of course the S&P would actually also do a U-turn to actually come down again. Yeah, so watch this. If you see a U-turn, then you might want to actually hold on to bullish trades and instead see any potential to actually do bearish trades. Okay, great. So I think that's all I have for today. And of course, like I said, we cannot catch the bottom. We cannot catch the bottom as an investor. You can only look at what are the price levels which you are actually comfortable to actually buy in the stocks, and also look at historical areas where there was actually a so-called support for your stocks. And of course, if the market rebounces, then of course that's the time where the stocks which you actually invested in potentially you can also rebound according to those support levels and according to the change in market direction. So if you are a trader, then of course trade alongside the market movement. If the indication is actually still bearish, then of course trade on the bearish side. If you actually want to go against the market, make sure you are actually doing it also at so-called support levels, and also enter into structures that actually give you structures that can actually give you a margin of safety. Okay, so I will catch you guys next week. If you have actually any questions, please do post on the chat box here, and of course I can always answer them after the show if I actually see them, or even post it on the Facebook page. Yeah. So until then, I wish you all the best in trading the markets this week. Yeah. Please watch the indicators and trade safely. Okay, bye bye.